We've had Zambia's Copperbelt Energy Corporation making headlines. The company is set to invest $164 million for a 60% stake in Nigeria's Abuja electricity distribution company, a move aimed at reforming the power sector and addressing the need for increased investment. Joining us for more is Michael Tani, Managing Director of Corporate Development at Copperbelt Energy Corporation. Thanks so much, Michael, for joining us this afternoon.
It's a pleasure. Thank you very much.
So as I highlighted there, we've had the company making headlines on the back of this acquisition, acquiring Abuja Electricity Distribution Company. Take us through the rationale right at the top.
Okay, well, the Nigerian government is privatizing all of its power sector apart from transmission, and even that's being operated independently. And I think the reason they're doing it is to bring new investment into the sector. It's underperformed its consumers for many, many years. Most consumers don't have power for more than a few hours a day, and I think everyone's had enough. So the current government, the president in particular, has promoted privatization as a means of addressing that problem. So being a distribution company in Africa ourselves, in Zambia, we took an interest in it and put in a bid along with many others. And we were lucky enough to be preferred bidder for Abuja.
How rigorous a bidding process were we looking at, so we get a sense of the kind of investment appeal that was actually put on the table, because you highlight that the government is looking to attract more investment its way?
Sure. Well, it was very tough, I have to say. I think at the beginning there were about 900 bidders, not just for this asset but for the other companies for sale. But eventually it was whittled down to a handful after a couple of stages. And in the end, it came down to the quality of your business plan presented to the government. And I think what's impressed us is the seriousness which the government is taking it. And by that I mean they're supporting the process with their own people, with advisors. They're putting in the relevant laws, and they're giving it due attention to make sure it's a success. Mm-hmm. And also the Nigerians themselves, particularly the investors, they are at the forefront of investing in the sector. So there's many investors there who, in fact, all of the winning bidders have been led by Nigerian consortia. So they have confidence in the sector, so that actually gives us confidence as well.
Where everyone has confidence in the sector, it ramps up the competitiveness within that landscape quite a bit.
Sure.
So what's your assessment of that competitive landscape?
Well, luckily for the distribution sector, we weren't competing just on price, we were competing on quality of our business plan. So we're quite confident that we can manage the business plan in terms of reducing losses and efficiency, because that's our core business. So the system didn't force you to overbid and take too many risks. It was really focused towards the quality of what you were doing in the distribution side. So really you bid based on your loss reduction profile, not on price.
Mm-hmm. When it comes to price, you've settled on a price tag of $164 million here. Take us through when you're expecting return on investment to be reaped at. You know, what kind of targets have been set moving forward? Well,
the targets they're set were the targets that we ourselves set in our business plan, really. The price was fixed based on the asset value. But really, we see about 3 years of stabilization where we have to invest a lot in the network. We have an investment plan of about $500 million in various types of equipment, particularly metering and improved management processes. And we see most investment returns coming in the 3 to 7 year timescales. The government is also encouraging companies to list as soon as they possibly can. You normally need 3 years worth of positive results to list. Mm-hmm. We've already had discussions with the SEC there about that and the stock exchange. So it's going to be tough for the first couple of years. Everyone's trying to make it work, but after that I think it'll be very lucrative. You've got earnings growth from increased customer numbers, more generation and higher tariffs coming through in future years. How much tougher a feat is this, where you're looking at the area you've invested in being relatively lightly populated? You know, it's dominated by the federal capital. It has around 600,000 customers and an average electrification rate of 27%. So certainly the scope to grow is there, but you've got to put the question who you'll be catering to moving forward with the area being lightly populated. Well, I think, first of all, Abuja itself is growing very quickly, and there is some industrial development in the other states as well, particularly Kogi State. And I think with the power sector improving, we're going to see more industrialization, so we can certainly see more large creditworthy customers coming through. Also in the more rural areas, yes, there's a need to increase electrification. But the way the tariff model works, in any case, it does incentivize you to get a return on your investment, wherever your investment is. So they've looked at a regulatory system in line with international models, and from what we can see, it should work quite well. and it should cater for both the residential sector, the remote sector, and also the industrial sector.
For the average Nigerian, what does this mean in terms of the price at which they'll be getting electricity?
Okay, well, tariffs are going up. They're not going up to such a great degree, but they're going up a little bit more than inflation for the first few years, and that's been pre-programmed into the whole system so that tariffs become cost reflective, and that's a trend that we're seeing in other countries, including South Africa. But in Nigeria, you have to remember that most people have generators at their house, and they use them for most of the time. So if the grid starts to work properly, even if the tariffs are a little bit higher than they used to be from the grid, they're still saving money because the grid is going to be working more efficiently. They won't need the generators as much, hopefully eventually not at all, and they will save money in the end. So we don't see anybody in the country trying to oppose that now. They all understand how much money they spend and probably waste on generators.
From your perspective, I mean, you're seeming to be pretty optimistic and positive about the road ahead with this investment having been made. Do you foresee any major challenges or hurdles moving forward?
Well, there's always challenges and hurdles. We have to react very quickly. We have to retrain a lot of people, put in a lot of technology very quickly, and bring in the best people we possibly can to do it as quickly as possible. So we're not pretending it's going to be easy, but at the end of the day, it's our core business. And what's good about it is that Nigeria, I think, is the first in the continent, maybe after Uganda or one or two North African countries, to do this kind of thing. And we're hopeful that other countries will follow suit, and eventually it's in everyone's interest to see this happen.